Hello, this is Julia C. Welcome to 408 Home Alone. Now, a couple of weeks ago, I have sent out this California HFA program for the first-time home buyer. It's a free money. Many people were interested on it, but they have a lot of questions. So I just wanted to use this video to explain the basic qualification of this program. So if you wanted to know if you qualify, please stay at the end. We're going to show you how much you can qualify to buy. This program is intended for the first-time home buyer. So if you are first-time home buyer, what is the definition of first-time home buyer? If you have not had a home ownership for the last 3 years, then you are first-time home buyer. So if you have a home before, but you sold it 3 years ago, you sold it, and for the last 3 years, you don't own any home, then you are qualified as a first-time home buyer. Now, if you have a home, if you have own homes in out of the state, you are not first-time home buyer. Okay, the second condition to be qualified is you must buy this home as your primary residence. Cannot rent it out. Okay, you have to buy it as a primary residence. And then the third condition that you have to complete a homeowner education counseling. You're gonna get the certificate after you finish the education. The education is really simple. You can take it online. It's like about 8 hours, just to show you a responsibility of a homeowner. It's not like a renter that anything break, you just call your landlord to come and fix it. As a homeowner, besides the mortgage, you have to be responsible to pay your insurance, your property tax, and then also ongoing maintenance. You have to pay it on time, just to show you are responsible homeowner. Okay, so that's the education certificate. And then you have to meet a certain income criteria. Okay, this program is more for like helping people with not so high income to be a homeowner. So how do you qualify? You have to check the median income in the area, and then your income limit cannot be more than 80% of the area median income. So there's a link here. I'm going to share with you this website. So in this link here, and then you can, so like, for example, here as a Mattel County, the area median income is 133,600. So 80% of that, so it's like $106,880. So if this is a Mattel, and then for simple, create a table to cover like a Bay Area, 6 counties plus Sacramento. What is the income limit? What is the highest purchase price? What is the monthly expenses that you can expect? And then I'm going to also show you if you don't have any down payment, and you can also buy a home with 0% down payment. Isn't that great? Let's go take a look at the table. This is the Santa Clara County. The highest income that you can qualify, it's $118,960. That's the highest. Your income cannot be more than that. Okay, if your income is more than that, you don't qualify. And then other 5 counties in the Bay Area, like Marin County, Alameda County, San Francisco, San Mateo, and Contra Costa, that all of them have the income limit is $106,880. This is in terms of monthly income, is like that. Okay, in Sacramento, the highest income would be 72,720. So that's your annual income. This is monthly income. Now you cannot have a higher income, higher than that, you don't qualify. But if your income is too low, you may not be able to get the loan because this is it's a check. They're going to check your W-2, your paycheck. This is a full document loan, so it cannot be too low. So the debt to income, this is maximum debt to income, has to be 45%. Okay, so like all the debt divided by your income cannot be more than 45%. So that's kind of limit how much how low your income can go, right? And then based on Friday's rate, that's 30 years fixed, that's a 5%. And then this is a table for the purchase price. So if you're in the higher income to qualify, maximum purchase price is 750,000 in Santa Clara. Okay, and then in San Mateo and other 5 county, it's 670,000. In Sacramento, it's 470,000. Okay, in Sacramento, 470,000 probably you can get a single family home. For other in the Bay Area, probably 750. In Santa Clara is probably going to get a townhouse or a condo. Okay, so this is how it works. So you put 10% down. This is use this example. 750 is your purchase price. 75,000 is your 10% down payment, and then the government, Cal HFA, give you a down payment 10%, 75,000. This money is free. You don't pay any payment. You don't pay any interest. Okay. Now, one requirement is that you have to be live in the house for 5 years. So if you live 5 years, this 75,000, this down payment will forgiven. So you don't have to pay back. But if you live shorter than 5 years, this money has to pay back. Okay, so stay in the house for 5 years. So the loan amount is 600. That's the 80%. And this is mortgage based on 5% mortgage payment, and then the tax, and then the insurance, and then the HOA. Because it's a townhouse, we're just assuming the HOA is 250, maybe higher, maybe lower. If it's a higher, then you just adjust the debt to income to make it work. If it's lower, great, then you can increasing the purchase price higher. Okay, and then assuming other miscellaneous monthly payments, just like your recurring credit card payment, just $50. So maximum monthly housing expenses is $4,405. Okay, so that's the maximum monthly housing payment. Okay, so okay, same thing for other county here. Maximum 670. Okay, same number, just to for you to simple understand. Now I have another one here in Santa Clara, just to give you an example. If you don't put any down payment, say I put 0% down payment, no down payment, see, down payment 0. Now if you put 0% down payment, you just take the 10% from the Cal HFA. So that for that, your maximum purchase price is 660, not 750, because you don't have a down payment, then your monthly expense will be higher. So that's why the purchase price has to be lower. If you don't have a down payment more than 20%, then there will be a mortgage insurance. So this table gives you a maximum purchase price based on the highest income, 80% of the median income. But if you have more down payment, of course, your purchase price can be higher. If you put more down payment, but the Cal FHA only give you 10% of extra. But you do limit to the maximum loan amount, 647,200. That's the maximum loan amount you can qualify. And if you qualify, you go to this website. I'm going to share the link for the website, the CalFHA website. Under there, you can look up for each area the loan agent, a loan lender from the website. Not everyone, like your local bank, cannot do this loan. It's a special loan that only those approved lender can do it. So you have to choose those lender from the website to do the loan for you. They do not, most of the time, they do not give you like a pre-committed loan approval that when you make an offer, you need to put the loan contingency because they don't give you that pre-approval letter. So you do tell them that you plan to get this program, you have a loan contingency, and in a competitive market, seller may not pick you as the buyer, right? But for townhouse and condo, when the demand is slowing down, it's possible that you will be able, your offer will be accepted. Okay, so just don't be discouraged. If you qualify, take advantage of this free money, right? 5 years, you don't have to pay them back. If you don't have enough down payment and your income be able to qualify, you don't have to have a down payment. Just take the 10% from the Cal HFA and then use it as a down payment. So that's a great program. It's a purpose to help first-time home buyer with moderate and lower income into the home ownership. So don't get discouraged. Talk to us if you have any question. We can help you find a home. We can work with the lender to get you into this program. Okay, I hope the information is useful. If you like it, please give me a like and subscribe to our channel if you haven't done so. See you next time. Thank you for watching. Bye-bye.